What is going on with DocuSign? The stock is up 14% in the pre market. We are about a half hour before the market opens on Friday, December 6th. Well, there's a lot of good things happening with DocuSign. And I'd like to take you through that. DocuSign announced their earnings yesterday after the market closed. They announced that they are growing their revenue. Top line revenue is growing nicely. The international growth was really impressive. They also have reduced their headcount and their expenses. That, as a result, has grown their margins. So, a lot of good things are happening at DocuSign. They really are rewarding investors. Over the past year, DocuSign is up 76%, and that's not including the 14% I expect the stock's going to rise once the market opens. Software companies are a good place to invest in 2024. The reason for it is the AI hype really took a lot of capital into semiconductors, utility companies that are expected are going to benefit from the AI build out. And that may be the case. What was left off to the side were software companies. These are fantastic businesses, businesses that produce very high margins. In the case of DocuSign, they have gross margins at 80%. That's phenomenal, and they're growing their top line revenue by 8%. Those things really look good to me, and I'm glad I invested in DocuSign. Should I buy more shares? Well, I'll answer that at the end of this video and at the end of my analysis after I form some conclusions. Now, let's take a look at the fundamentals and the financials. DocuSign is a $17 billion market cap company. In my book, that's a small cap. The revenue is just a little under $3 billion. And they get a very good multiple on revenue because of those high margins. And the industry is very desirable. The PE is really attractive at 17, considering this is a technology stock. Some analysts believe that it's overpriced by 14%. It's likely due to the fact that it's really risen nicely over the past year. When we look at their financials, I see a lot of green on the screen when it comes to revenue growth, which is excellent. They especially grew very fast during COVID, and they continue to extend that growth, growing 8% the most recent earnings release, and really showing their strength in being able to have a very high gross margin. They actually grew their gross margin by about 1 percentage point from 79% to 80% gross margin. Nicely done, DocuSign. Not only do they have good revenue growth, they also have excellent cash flow. And cash flow is the principal method or measure that I look at to value a company, and they've grown it over time real nicely. Their trailing 12 months is 889 million. Their revenue is only 3 billion, so that's a very, very good ratio of free cash flow to their top line revenue. It's those high margins that are showing up in this cash flow number. I'll use that number when I value the company based on free cash flows and a forecast I put together on the cash flows I expect DocuSign is going to produce in the future. The balance sheet looks great. They have more cash than they do debt. So they have basically a net cash position of $811 million. So no debt on the balance sheet. Makes them a very low risk investment since the company is really far from becoming financially strapped. In addition to that, they produce about $247 million of EBITDA. So just a strong business. 14 analysts cover DocuSign, and they believe the stock is overpriced by about 14%. The stock's really gone up. I'm sure some of them are going to restate their price targets and maybe increase them since the news was favorable out of their earnings report. They base their conclusions on earnings per share, and I like to look at earnings per share as well, and their earnings look really good. The revenue is going to grow in the future based on the forecast that is a consensus forecast that these analysts have put together. Revenue is going to grow by 5.89% in the next fiscal year, which starts on February 1st, 2025. And it's going to grow by 7.5 and then 4.4. Earnings per share, the next full year, which I'm going to use, is $3.76. Overall, they are using a forward PE of 22. I'm going to use an 18 just to keep it nice and conservative. And I'll use that in my valuation, where I combine both a valuation based on free cash flow and a valuation based on earnings per share. DocuSign is fairly priced. I've looked at the stock and valued it based on free cash flows, looking at a forecast of cash flows I expect the company is going to produce, discounted it by 8%. And I get to a discount of 21% when I compare the value of the stock versus its stock price. Now, keep in mind, this is before the market opens. It's supposed to open and the stock's supposed to go up 14%. So maybe this is more towards 7% discount. Earnings per share don't quite sustain the discount. And I agree with the analysts that say it's sold at a premium of 14%. I'm calculating a 15% premium. When I combine the two, it's a 9% discount. But again, when the stock price opens today, it's going to open 14% higher, and we're going to be pretty much at a fair price for DocuSign. As a stock investor, I have the freedom to invest in whatever industry I deem to feel is really desirable, really profitable. And in the case of DocuSign, I really like their industry. And I have experience in the software industry, having worked professionally in the software industry. So I like DocuSign, and I put them mostly in the green, most desirable quadrant within my quadrant of desirability. Now, I put them there because of their high margins. I also like the fact that DocuSign is the leader, and I know that they have some competition. Most notably, Adobe is trying to come after this space, which is a pretty good threat, except the user experience, the adoption, and the network effect favor DocuSign in the software industry. That really does matter. And DocuSign is clearly the leader in the digital signature capture market. They also have really good partnerships with software companies like Salesforce, where DocuSign is, in essence, embedded in their software. It'd be very hard to replace them out of those partnerships. So overall, I think DocuSign is a very desirable business. I like being an owner in a business like DocuSign's. The investment in DocuSign has been a good one. I'm up 60% on my investment. I invested $21,735, and I'm sitting on stock that's worth $34,690. Now, at this time, I've got a fairly priced stock. It's certainly risen up to value that I expected. So I'm going to hold my shares of DocuSign, be very comfortable in holding this for the long term, but I'm not going to buy additional shares. I have a nice portfolio of software companies. And for now, I'm going to hold on DocuSign and see what happens in the future. One additional area of value for DocuSign is DocuSign most definitely is a good acquisition for a larger software company. We saw their fundamentals. They have terrific gross margin. They have more cash than they do debt. They have excellent free cash flow, market leader. So, geez, if a Microsoft wanted to add these guys to their portfolio, it would make a lot of sense. And they'd probably pay a handsome premium to DocuSign stockholders when they acquire them. So that's also out there. It's a possibility that DocuSign get acquired in the future. Not saying it's going to happen. I'm just saying there's a pretty good chance it could happen. So that's my review of DocuSign. Just a reminder, I'm an investor. I'm not providing any financial advice. I'm just sharing my experience, my analysis, and why I invest in DocuSign. Please don't take anything of what I said as a recommendation for you to buy, hold, or sell DocuSign. With that, thank you so much for watching, and good luck investing.